quarterly update of the business cycle performance relative to the overall stock market, specifically the S&P 500 stock index. I'm Rich Potts for Critical Points, April 1st, 2023. All right, this chart is a monthly chart of the S&P 500 cash index. And what I'm showing is what various business cycles, long term, how did that relate to the amount of gain and perhaps drop, loss, whatever. So what we have is in 2009, there was a major long-term business cycle top into a super cycle bottom, and we correctly forecast it would not be as much downside as the cycle implied. It was like 70% down, and we said we're getting new statistics. These super cycles don't have as much downside as they used to. It's dropping down to a smaller super cycle of 40 to 60% down. The stock market dropped 55%, so we were correct. However, I also said the stock market for some country might repeat history and be down 70 or 90%, and it turned out Russia was down 85%. I actually bought them, okay, and sold it out a couple years later. One time it was up 180% as a rebound. In March 2009, I said be bullish. I do not recall how close I was to the bottom, how close day-wise, date, or whatever. But anyways, we said be bullish until 2018 to 2021, when there would be there would be a recession, and a cyclical recession, but also the once a decade type sell signal bear market. And lo and behold, we had this bull market, and the economy grew despite all these people betting against it. In 2012, some people were just as negative as they were in 2008, 2009. There was politics going on where they were trying to hurt the economy even, okay? And it didn't work for them, and I said it wouldn't work. That was a minor long-term bottom, and I said a lot of people are just going to miss out and buy much later than they should. Well, that's what occurred all through here. They all woke up in a process to do it, okay? Now, we finally get into the time frame, and actually Europe, Eurozone, world was rolling over when we thought towards a recession and a bear market in stocks, but the stock market in the U.S. changed its mind, went up again, and that's allowed for a major long-term business cycle to last a decade. It's called the juggler business cycle. We also call it LT1 for our model labeling, giving a name, okay? But we were right towards the end. Something called a virus pandemic recession, something entirely new, came in and proved once again the business cycle works. It proved once again bad news shows up, okay? And so that's the value of this, is warning when the bad news is coming again. We may not be geniuses and tell you the exact story. That's very difficult to do. I don't think anybody does it on a long-term basis. But some do it better than others, okay? And sometimes you don't need to know it. You just need to know the bad times are coming. So, big collapse. So what did the market do? It went up 409% from the lowest price in 2009. Now, none of us bought that price. The model didn't even buy that price, okay? But that's the lowest price. We calculated up towards the highest, and it went to 409% up. I think that's valuable knowledge, okay? The market then dropped something like 35%. I put a sell signal out just hours before that top. Now, we also had other sell signals. We jumped in and out trying to find the top. Wrote it all, bet downside in the futures market from my family hedge fund, while all my retirement money and whatever other money entirely out of the market, just boom, get out of it. Bought back in 2 days after the bottom and said not only be short-term bullish, but intermediate, long-term, even major long-term bullish. So right back up. So how well is this new major long-term business cycle doing? This one went up 409%. What is this doing? It's up a total of 86% as of the end of this decade. Or I'm sorry, as of the end of March of this year, okay? Now, we're projecting this to be in a bull market to the end of this decade. So this may go up 400% as well. It may be less. It may be more. We have various ideas. We discuss this weekly in our service, okay? But this line is going up all the way to the end of the decade. We're convinced of it. History's repeating. That's how long it'll take us to really break our economy machine and cause another recession. So it's working about as anticipated, despite all the bad news and the big drop last year, which was right on time, on schedule for a minor long-term bull bear market. But it was also much more drama than some of the others, okay? And it came down, and we believed it bottom October 12th. So we think we're in a new bull market called an LT3, relates maybe to a kitchen business cycle for the economy that was discovered in business inventory that suggests businesses throttle up and throttle down so for their inventories and other business measurements, and the stock market throttles up and throttles down in line with that, but it can be its own timing. Some of the business statistics and fundamentals can occur months ahead of the stock market moving or months after. This is why it's important to also study just prices and charts and technical analysis and mix it in with your fundamental analysis to give you a better timing tool. This business cycle helps with that, and the model does look at all those other things as best we can. Okay. Any rate, since the October 12th bottom going into the end of March, yesterday, the market was up 19%. This is working very well for that kind of business. I did not have to be up that much, okay? And we think it's got quite a bit further to go. We think it's going up to 53, 5,400, maybe higher, maybe much higher, by next year to early following year, okay? This year, we think it's going to 4,600s. I'm hopeful it goes higher than that. But we're saying this might not be a full recovery year. But we'll see. Maybe they're going to get really bulled up in the latter half of this year because we truly believe inflation's going down into 2025, interest rates going down to 2025. Real estate prices can back off till then, or at least cool off. Some things might just move sideways. And so with this, we're going to see the economy grow during that time and also have lower interest rates. Bottom line is, stock market should move higher. We think this looks great, okay? Now, something else to discuss is, from the 2009 bottom, wasn't just the long-term, major long-term, with the miners inside of it, but it was also a super cycle bull market, or a phase of a super cycle. So we can extend from this super cycle and see how accurate is the model that we're actually in a super cycle bull market. Well, as of yesterday, March 31st, 2023, the market was up 527% since the 2009 bottom. These business cycles are working, and we think it's going higher into this decade. It might be 6,800, but there can be big setbacks along the way, and the model will warn us. Is this going to be a minor setback? Or is this going to be something more important? Or is this going to be something major, as if we're really going to be scared it's going to get ugly? We may even have a recession. And it tries to catalog that. And it creates also a clock-like model to help us with the timing of that. So put this work to use for you. Be part of our journey here in what I think is going to be a profitable decade. There will be things we will get wrong along the way, but likely it's going to work out. I've been using this since the 1990s for the stock market, even a bit before with the commodities. And then I've back tested this for the entire history of this country, plus countries such as over in Europe that had stock markets long before we did. And it does take us about a decade to build our economy to the point it breaks on its own or we break it. And businesses and consumers are the biggest driver of this. Second place is the government and the Federal Reserve. The Federal Reserve, however, can become more important because we react to the Federal Reserve. Plus, the Federal Reserve can shove our interest rates around and impact us business-wise. All right, that's enough for now. Quarterly update here as of March 2023. I think things are working really well. I will zoom in here and just say, I think what you want to watch for, if you don't quite believe me, this was a beautiful turnaround action, the most important kind of bottom during a year that we also use as the more important kind of bottom to time long-term bull bear markets. We think it's up and away when it takes out the February high at 4195.44. We think that's additional evidence of a long-term bull market. When it takes out the August high of last year at 4325.28, that will be additional evidence, and as far as we're concerned, that's all the evidence we need. Okay, that's my little group and me as the leader. That's it. We already thought we had evidence all the way back in October, and yes, we had a couple other times jumping in and out along the way, and then we can see this evidence building all along. So yes, if it goes below 3808.86, many of us, including myself, will be looking to reevaluate, but it's possible it's just hesitating. It's not a new bear market at all. And I think, the obvious, it shouldn't even be called evidence. It's going to be obvious we're in a bull market if it goes to a new record high, and that means trading above 4818.62. Well, that's way too late for me to buy, okay? So I'm really thankful for the model that we've been buying in here, okay? And that even bought some more here, and it can move higher for us. Past results are not necessarily indicative of future results. Go to criticalpointpod.com and check out what we have there for free stuff, but also consider some of the links that will take you to where you can sign up and get on board for this subscription service. Okay, so here's my website. There's the address. Check out about myself modeling, but there's links to take you to find the videos, audios. I'm also going to try to do more blogging there. I've set up a different Twitter account to just alert people that we're putting something up. And but this is where the actual videos and audios are held, and there's also a sign up page there, as well as a link to each audio video. Some are free, most are not, they're locked up. And then this is our website where you can also find a place to sign up. Get on board with the journey. Past results are not necessarily indicative of future results. Let's go get them on the bull side. I realize our country's got a lot of negative things going on right now, a lot of ill feelings and thinking, but it's fascinating how history shows we still do business and the stock market can still be bullish. Thank you.